Hello and welcome. You're watching BT TV. I'm Tanya Neja and this is Market Today, a show where we'll get you all the latest market updates, stocks and sectors that are buzzing in and much more. And let's first take a look at the markets at this point in time. And good news is that we are still holding on to the gains. 19,600 also was briefly seen. However, we are now trading below that 19,600 mark. 19,591 is the level where we are at, and for Sensex it is 65,928. We are trading lower from that 66,000 level, but however we are still in the green and 222 points uptick there on Sensex as well. Let's take a look at the broader markets as well. Broader markets continue to support and they continue to trade in the green. And if you look at the mid cap and small cap indices, 10,779 is the level for Nifty Mid Cap 50, and for Nifty Mid Cap 100 it is 37,821. 192 points uptick there, and small cap also trading on a flattish note. However, in the green, 11,726 is the level where we are at. Let's pull up some of the gainers for you from today's trading session and see the stocks that are supporting the markets as we speak. So it's clearly the pharma day, and of course M&M up around 4% on the back of stellar Q1 earnings, 1528 there, that level on M&M. Divi's Lab continue to outperform, 4% uptick there, 3905 level on that particular counter. SBI Life, one of the top gainers, 2.5% uptick there as well. And if you look at some of the other gainers, Sun Pharma, as we were talking about pharma stocks in our morning market show as well, and it's clearly a pharma day today, and these stocks have been buzzing off late. 1160 is the level on Sun Pharma as we speak, and Hindalco, some of the metal counters also, they are trading in the green as we speak. These are some of the other gainers on your screen: Grasim, Bajaj Finserv and TCS, some of the IT counters, and IT in fact is one of the top performing index from today's trading session. And on the flip side, let's now take a look at some of the losers. Britannia, on the back of Q1 earnings, street clearly not liking the Q1 results from this company. 4655 is the level, 3% downtick there. SBI net interest margin figure, that was a miss, and clearly the stock was down in Friday's trading session and it is down today as well. Street really not liking that part, 1% downtick there. Tata Motors, Bajaj Auto, some of the other top losers for you. And if you look at some sectoral indices as well, as I mentioned, IT continues to perform really well, 1% uptick there. So a lot of stocks which are buzzing from this particular index: Emphasis, Persistent, LTI, Mindtree, all up in the trade today to the tune of 2%. TCS, Coforge also among the top gainers, and also Nifty Pharma. It's Pharma day as well, and this sector has been performing really well from the past few sessions. But now it is important to understand that where are the markets headed going forward, and which are the sectors, and where are the pockets of opportunities. So to discuss this, let's welcome our guest on the show today. We have with us Mr. Lavlesh Sharma, who is the co-founder of Market Feds. Thank you so much, Mr. Sharma, for taking the time out and joining us here on Business Today Television. Let me start with the market outlook first. I mean, this is going to be a data heavy week that includes US inflation data and of course the RBI monetary policy decision as well. And we are seeing some nervousness at record high levels for the Indian markets. But how do you see things moving going forward?
Well, yes, this is going to be one of the historic weeks, and obviously US CPI data, and along with that, you also have RBI. So it all add, fuel to the fire. And at the same time, we believe that Nifty is sustaining its uptrend, though there are some minor profit bookings at the higher level of around 19,000, 20,000 and 19,880. But I still believe the overall breadth in the underlying components of the index is still good. Obviously, there is some sector rotation going on, as you highlighted. Pharma is obviously favored in last few days, and today as well has gained a lot. But as far as Nifty and indices are concerned, I believe on the Nifty 50, 19,519, 19,580 would prove to be a very crucial support. If that is taken out as a short-term support, I believe it can further fall. But as far as we are above this level, I still believe that there is an upside potential in the indices, especially Nifty 50, to mark and reach that 19,800 level over the next few days. Given the line of events, there may be volatility, there may be some expansion in the range, but on the higher side, we are looking at 19,800, while on the downside, the levels would protect, the downside would be 19,575.
Okay, 19,575 and 19,800. These are the levels. Keep an eye on that. And also, let's talk about the stock of the day, Mr. Sharma, and that is Paytm. And we'll come to Zomato as well. But first, let's talk about Paytm. I mean, Vijay Shekhar Sharma and Anfint have entered into an agreement where Mr. Sharma will purchase a 10.3% stake in Paytm, and that transaction will make Sharma and the promoter entities the largest shareholder in Paytm. Clearly, we have seen the impact in the morning trade as well, and the stock continues to perform really well on the back of this news. But has the tide really turned for this particular stock? Because we have seen the stock performing, and it has recovered from recovered significantly from its 52-week low. What are your thoughts on Paytm?
Well, yes, there is a lot of activity on the financial front, with the exit of the previous investors and then new investor and promoter probably coming into the market with a very substantial stake. But at the same time, the volatility in the stock is going to hurt if you are a very short-term trader. Overall, the outlook on the stock is very positive. It is actually important to see that Paytm touched the levels of around 850 back in 2022 as well. That was August, and we are at the same juncture after almost a year. The point here is that if probably Paytm sustains these levels of 830 to 820, I think the turnaround story which is reflected in the stock prices can sustain. Though today it gapped up huge, there was a huge gap up of around 10-12%. So let the volatility subside, let the news be absorbed in the prices, and you know the the halt in the overall price action should retrace back to 816, 820. At that level, I believe Paytm would be a very good buy for anyone who's looking to jump in this particular roller coaster ride. On the downside, 786, I believe, technically is a very strong support as far as the volume analysis is also concerned. So yes, on the short term to mid term outlook, I think Paytm has its upside potential, and above 916, once the stock goes above, there is a very high chances that it can again regain that four-digit mark of 1,000.
Okay, so you are saying, Mr. Sharma, that the buy zone is around 816 rupees, right?
Right, right. Because obviously there is a big gap today, and it is like everyone is jumping in the same boat. So right now, as a contrarian, I would avoid it. I would rather wait for the stock to correct to lower levels of 816, 820. That is the level where my risk is favorable and reward is probably much higher.
Okay, absolutely. That's the verdict coming in as far as Paytm is concerned. But let's talk about Zomato as well, Mr. Sharma, because Zomato was on a roll in Friday's trading session. Of course, on the back of stellar Q1 earnings, it posted a net profit of 2 crore rupees. However, it also surpassed the 100 mark today, so it is in focus today as well. What are your thoughts on Zomato?
Well, Tanya, I'm bit skeptical when it comes to Zomato. Obviously, the company has turned around. That's a great news. I think we discussed it when it was at around 80 levels as well. The point is that everything which was there for a stock to see in terms of positive news, positive flows is out now. Uh, it is important how the company is also going to sustain next few quarters. The company is in profit. but there is going to be a booking in the stock. I think the stock from current levels of 100, it should likely correct back to 85, 86 over the next couple of days. So if you have been lucky and if you were holding Zomato and if you're a short-term trader, I'll probably ask you to exit because the stock may see another 10% correction from current levels. If you are obviously someone who's holding from the levels of 150 or probably IPO time, I think you should stick to the investment. Around 88, 89, I expect a turnaround or probably a reversal in price. That can again take price to any much higher level. But at current point, I think there is a profit booking that is going to come into this stock.
Okay, that was the take on Zomato. But let's talk about earnings. It's the earnings season. So, what is your take on the earnings trajectory for the rest of 2023, and what is your take on the management commentary? I mean, 40 out of 50 Nifty 50 stocks have already declared earnings, and we are at the fag end of the earnings season. So, if you talk about earnings, we have seen a mixed set of numbers. But how do you read Q1 earnings, performance in any sector that really stood out for you?
I'll have a few broad important points to focus on that. Whatever the tide we were in of inflation since 2022, we probably look at it as it is going to cool, and but it may remain at a comfortable level in India, but still global markets may continue to feel the heat. And obviously, when there is a kind of an pressure on the inflation front, we believe that tightening can continue. It would be very much likely that any surprise in the inflation numbers would again push central banks, especially on the Western market, to push that tightening through its rates. While at the same time, I believe India is outperformed, but it may continue to be synchronized to what global markets are doing at this point in time. And as far as earnings and Indian sectors are concerned, there are two, three sectors that are coming out of a long-term consolidation, specifically when it comes to pharma. I think there are few stocks that are giving you an opportunity, probably for that short-term to mid-term, probably for next 6 months to 1 year kind of investment. So one space which one should look at is pharmaceutical space. Some of the stocks, some of the leaders of this space are regaining the strength, and probably in the next run, they are gonna see an upside potential of around 15 to 25%. Stocks like Sun Pharma, stocks like Divi's Laboratories, I think these stocks should be in on one's radar.
And what about Cipla, Mr. Sharma?
Cipla has seen a good run. To be honest, I wasn't expecting in terms of price, but with the recent news flow, I think Cipla is at a very crucial price of around 1250, But I would give it a wait because the kind of volatility we have already seen in terms of price, which has moved from already 1100 to 1230, 1240 kind of levels. So I believe that Cipla, one should probably look at a correction. 1163, 1150 would be the levels where I would be happy to jump in. But right now, as the risk reward is not in my favor, I would avoid Cipla. Rather, I would have my chips on Sun Pharma.
Okay, absolutely got that. And let's talk about one space that is also buzzing in today's trading session, and that is Railway Pack. Shares of IRFC, IRCON, Railtel Corporation of India, RVNL. That should, these stocks should come up for you on screen, and they are up to the tune of 6% in today's trading session. And this is after Prime Minister Narendra Modi laid the foundation stone for the redevelopment of 508 railway stations across the country. Mr. Sharma, we have already seen a very sharp run up. If we talk about this Railway Pack. Stocks like RVNL, they are all multi-baggers only. But after this sharp run up as well, I mean, what are your thoughts? I mean, is it still a good time to get into these stocks, or one should really book profits at this point in time?
I think if you are a very short term or a mid term investor, probably a good time to book the profit, or at least if not trail your stop loss or whatever you have on the table as in terms of profit, probably you should book 50% of that. See, there is a kind of unlocking in this entire space, which is discounting the fact that railway passengers and the growth in terms of um, uh, passengers that is going to till 2030 is going to be more than 15%. So on the back of that, and along with the recent expansion in the prices, if you are someone who's going to look for that 5 7 years, this is a fairly very new space that is coming out of a long term consolidation seen already 50 to 100% upside, but still it's a good buy for anyone who's having that kind of a view where they are going to take a bet for next 4 to 5 years. But if you're a very short-term trader, probably risk reward is not in favor. The stock prices have already zoomed up 10 to 15%, and the volatility or any short-term profit booking may trigger the panic button. So as a short-term trader, I think probably one should avoid. But if you're in for the long haul or if you're in for a long term investment, I think these stocks certainly offer an opportunity, not just individually as a stock opportunity, but as well as adding to the portfolio and diversify your investment.
Okay, so for a long-term investor, which stocks are on your radar from this particular space?
Well, IRFC is still one good stock which I'm actually looking at. Another one is Railtel, the one which has probably not seen that kind of what do you say, upside in the recent term. Obviously, it is consolidating 140 to 180. The stock has been sideways since last 4 to 5 days, but I still believe Railtel is one stock which gives me that small risk and much higher reward kind of a pattern. The stock is very good, has a very good support at 166, 65. If it sustains this, moves beyond 178, I think this stock has a potential to test 200 plus kind of levels in next coming few days.
Okay, absolutely. So IRFC and Railtel, keep an eye on these two stocks. And on that wonderful note, thank you so much, Mr. Sharma, for taking the time out, sharing these wonderful ideas with us and being with us here on Business Today Television. So with that, it's time for us to wrap up this edition of Market Today. But if we look at the markets at this point in time, we are still holding on to the gains. Of course, we are still trading below that 66,000 level mark. However, 233 points uptick there on Sensex, and Nifty also trading 82 points higher as we speak. So let's wrap up this edition of Market Today. Stay tuned for all the latest market updates, and don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn and Instagram. So many thanks for watching, and stay tuned for all the latest market updates.
Hello and welcome to Tech Today. My name is Ayush Alavadi and we are so glad to be back here in the Tech Today studios in Mumbai. We enjoyed our time in Korea, but it's time to get back to business with an India special show now. And for that, we've got Mail on Tech Today, an exclusive